Hello and welcome to the FF News Virtual Arena. I'm your host, Doug Mackenzie, and on today's episode, we're going to be looking at how the payments industry has evolved, how fintechs are changing, and their interactions with banks. Joining me today, I have Anurag Bajaj from Standard Chartered. Anurag, thank you for joining us here. Could you tell our audience a bit more about yourself and your role at Standard Chartered, please?
Yes, absolutely, Doug, and thank you very much for inviting me. I'm delighted to be here. I run banks and broker-dealers at Standard Chartered. That is the part of financial institutions where we have housed the fintech or our emerging fintech business.
Wow.
And I've been involved in it almost right from the start. So, we have some scars and some good history and some great stories to share with you and your viewers today.
I'm really excited to hear them because, from your position, you must have seen it all. You've seen the industry change from going from competition against the fintechs to really embracing them. And I'm very excited to see what that's going to do in emerging markets, especially. So, to start the conversation and to set the scene, Anurag, could you tell us how the payments industry has moved on, even within the last 2 years?
Yeah, so it's kind of an evolution primarily on the retail side towards the newer players, towards the fintech players, because they offer a sort of value to retail clients that banks kind of never really stepped in to offer. So they bridge that gap in the banking space for end customers, small value payments, remittance type payments, peer-to-peer payments, and now more often business-to-business payments that banks have kind of ignored or not developed specific value propositions for. You said over the last 2 years, remember that in our side of the world, in the emerging markets, we are still not completely out of COVID, or we're only recently out of COVID, but there was an incredible movement of payments and activity online. So we saw a huge uptick in the volumes and the values of payments being sent that were digital, which means originated online and ended up through some online channel, and that trend continues into the new year as well.
That's absolutely incredible to really see how through adversity we're getting to a point where innovation is moving at such speeds because fintech has stepped in to help people with a situation that is not good. And so with that in mind, now we've had that groundwork laid, where do you see payment fintechs, in particular paytechs, expanding in the near term? Now that the customer base has gotten accustomed to these digital payments, what's next?
Okay, so just to give you some idea of numbers, we did a management team meeting recently, and 2 out of 10 people told me that they don't carry wallets because they had gone 100% digital. Right, so I think that's 8 people too few. And I think that time will come where everybody goes walletless or is carrying their payment mechanism on their phone. But the areas that we have seen emerge quite significantly are on e-commerce type payments because of contactless delivery, because of reduction of shopping mall traffic. People have done huge amounts of purchasing online, and moving the money between the buyers and the sellers has become a very, very viable business for a lot of our clients and prospective clients. So any client that's in the space of merchant acquisition or payment service provision has almost always a link to e-commerce. And that has really stepped up quite significantly over the last 6 to 12 months. Then you can talk about gaming, which are sort of in-game payments, more peer-to-peer. Now, we are not very active in this space today as a bank, but that space has also expanded and exploded quite dramatically and is of some note, in-game purchases, in-app purchases, and the like. So there's a lot of activity in that space from a digital perspective. And then I guess from a third aspect, you have, whole economy is digitizing. So great example that's been given is of India, which has built up a digital payments infrastructure. And there, the reduction of physical cash is quite significant. And you see a lot of payment fintechs in that space trying to sort of jump in on the digital infrastructure that is being created to move cash in India.
I completely brilliant to really see kind of the numbers that are coming out from, from these areas, these emerging hotspots of payments innovation, because it just shows that if you can attack innovation as fast as you want, because the existing infrastructures maybe aren't there, you can come up with some very exciting propositions and payment ideas, and the merchants are thriving because of it, and the customers are having a great time too. Now, I want to kind of dive deeper into some of these emerging hotspots. Where do you see around the world at your role at Standard Chartered? Where are some of the emerging market hotspots in the payments industry that speak to you? I know you've already provided the example of India, but are there any others?
Oh yeah, plenty. So again, Standard Chartered is an Asia, Africa, Middle East bank. So primarily emerging markets, and we cover a very significant proportion of the world's population through our franchise. And as a consequence, there is a lot of action and a lot of activity in our markets, primarily because fintech and automation is also linked to the last mile and around financial inclusion, which are really, really big themes in the markets that we operate in. So absolutely, in large markets with large populations, which have vast rural areas, dispersed populations, India being the prime example, Bangladesh, Pakistan, Indonesia, significant populations and significant room for penetration of financial services, Nigeria being another one. So we're seeing exciting sort of developments across. In the Middle East, the fintechs are operating in UAE, but they would like to operate in markets like Saudi Arabia, in Egypt, and we are being approached pretty much on a daily basis with some proposition or another from markets, from players that want to operate in these markets.
Yeah, you're in such a perfect position to operate there and really see some of the innovations there, but not just because you guys are so innovative, but also as a traditional institution whose bread and butter is to manage risk. You understand the regulatory and compliance nature of these incredible markets. So what are some of the biggest challenges you're seeing when it comes to the regulatory landscape of these hyper innovative, evolving marketplaces?
So I guess the big point there is that regulation is not consistent and it is not singular. So if you want to operate in a region, like let's say if you want to operate in the Middle East, or if you want to operate in ASEAN, the regulation across different markets is quite different. And honestly, that is not really the strength of the fintech players because they don't start with the binding constraints around technology, operations, regulation, compliance, etc. They want to know what the binding constraints is so that they can shape what they have, which is a market or a business proposition. So I think the first step is to recognize that both sides have their strengths and then to build off of those strengths. So from our perspective, we've been in these markets for, some of them for 160 plus years.
Wow.
So we have a good handle on the regulation, on the compliance issues and the legal frameworks in these markets. And we've worked with a lot of fintechs to help them grow across these markets. So, if you think about a fintech that wants to operate in Asia, they don't want to deal with 6 or 7 different banks across the markets that they are looking to launch in. They want to deal with probably 1, maximum 2 banks in those markets. And I think our footprint lends ourselves very well to be that one bank. And then the second bit is that, we may not have the nimbleness of a smaller player, and we may not be able to develop propositions and take them to market as quickly as a smaller player, but we have invested in digital infrastructure to deliver a fairly seamless end-to-end digital experience for companies, not just fintechs, for companies. Wow. And fintechs are really appreciative of that. And that's why they kind of come to us for access to these local networks and this local infrastructure.
Yeah, that leads really perfectly onto my next question, because I was wondering, how does Standard Chartered enable, for instance, not homegrown organizations, but for instance, we see a lot of movement from Kenya into Uganda. We see a lot of cross-pollination across borders now, facilitated by that globalization and the fact that, of the Internet of Things. So, that end-to-end system, can you tell us a bit more about that? And do you help, for instance, as you mentioned, not just fintechs, but businesses expand into new markets. You can sit down like the banker of choice and say, this is what you need to do, this is how you do it to expand into a new country, right?
Yeah, so we have had at Standard Chartered a global subsidiaries practice for the longest time, and this practice banks the subsidiaries across the globe of Fortune 500 companies headquartered in the West. Taking a leaf out of that book, we've similarly created a strategy around fintech, where we have said that we will only bank fintechs that are international champions operating in our footprint, or regional and national champions in our footprint. So in a way, we are not going to bank everyone because we won't be able to provide them the service they need or deserve.
Sure.
But we aspire to bank the bigger players. And that's what we've pretty much done over the last 12, 18 months. And we've put on those players, and we are partnering and working with them in various markets. So yeah, it is fascinating to see Western fintechs approach Asia with the same manner in which they have approached the Western markets. Doesn't work exactly the same. So I'll give you a great example where with one fintech, because of the compliance and legal infrastructure in a country, we worked with them to revamp their whole KYC process. Now, it is not up to us to do KYC for our fintechs, but because it matches our standards and we need a certain level of KYC to be done in order to be comfortable and satisfied with our clients, they were willing to go with our experience in the market, and they've completely revamped their KYC program to a standard where almost any bank would be happy and delighted to bank them. So there are plenty of these stories where we have worked with these fintechs not naturally active in our markets and allowed them or enabled them to operate in our footprint.
I think that's absolutely brilliant. Setting a baseline standard enables everyone to innovate at the same speed and really work together, because you can suddenly interact with so many different organizations very easily. As you mentioned, any bank would now be able to interact with that fintech because of the example and the standard that Standard Chartered set. And I think that's brilliant. Now,
of course, we don't aspire for our clients to go to other banks.
Of course, no.
But we do aspire to. We do aspire to engage with them and make sure that their standards are good enough for the banking system as a whole.
Of course. And so with that in mind, now that you've set this baseline, for instance, you brought up KYC, that's so important later down the line with, for instance, fighting AML. So what does that mean when it comes to boosting innovation in the payment space? How can banks and fintechs come together to create this innovative ecosystem that maybe wasn't there just purely on a governmental basis?
So, I mean, it goes back to what I said, that both parties need to recognize the strengths of each other. The big thing is that any sort of constraint or standard or, legal compliance framework, etc., is immediately seen as constraining to innovation. It doesn't necessarily have to be that way. So this is why we typically tend to work with the larger firms, because they get it, right?
Yeah.
And we are able to explain to them that it is important to stay within the sandbox of the rules and innovate within that sandbox. We have been, I guess, you could say, hurt in the past, where when we did not follow our strategy and we did not have the desired results of within the sandbox type of activity.
Sure.
So we work with them, and they have to acknowledge and recognize that. In many cases, we have sought third-party legal opinion on behalf of our clients, just so that we could explain to them what the banking sector expects in terms of standards. And then it is up to them to develop the business proposition, the client proposition, and we don't necessarily get involved in that space. So we stick to our knitting in explaining and advising on how we would want them to operate within the rules that are important. They stick to their knitting, which is innovating and matching, meeting the client at the coalface. And we kind of upgrade our infrastructure and our sort of connectivity with the local payment infrastructure to their liking in order to develop what is a fairly symbiotic relationship, where it's kind of a very cliched, but it's kind of win-win for the both of us, and win for the regulators as well, because the customers end up delighted and within the framework of the regulations.
Yeah, I think that is the kind of the dictionary definition really of how partnerships are being facilitated around the world in the fintech space. You know, the fact that digitization has enabled companies to really own their niche, and the institutions like Standard Chartered to provide that baseline level of success and loyalty. It's just absolutely brilliant. Now, one thing I like to have on the virtual arena, Anurag, is actual use cases. There's so much talk about fintech, and whenever you talk about innovation, it's very easy to be swept up in grand overtures. But I'd love to actually hear some of the recent partnerships that you've kind of been alluding to, that Standard Chartered has undertaken to support the growth of fintech companies in these emerging markets. Do you have any to mind?
Oh yeah, absolutely. I mean, I explained the KYC example, which was for a pretty large Western merchant acquisition company. It's kind of not as exciting perhaps because it delves into KYC and compliance, but there is a use case where, for Filipino workers, we partnered with a Chinese fintech and developed a blockchain solution to deliver payments within seconds to Filipino workers in the Philippines.
Wow.
And that was delivered to a payment wallet. So it wasn't even delivered into the bank account. It was delivered directly to payment wallets. So instant payments pretty much cross-border, which all banks talk about and they aspire to, but they don't necessarily have use cases around. And the whole kit and infrastructure is completely bespoke for this example that we ran for this particular firm. There is examples of companies where we have fully, through the use of API, application programming interfaces, automated the accounts receivables for them completely from soup to nuts. And that has enabled them to reconcile really quickly. That has enabled them to serve their clients really quickly. This was specifically in Hong Kong, and we are moving that to other markets as well. So there are plenty of these small stories where the ultimate client gets really good value and really good service, and it is built through a series of small innovations, all adding up to a very large and measurable outcome.
Fantastic. This concept of instant payments in an island nation such as the Philippines is so important. No longer are we having to transport huge amounts of money on boats to very small islands. Now, as you mentioned, workers can get instantly paid, and that's going to change society as we know it. I'm so excited to see what the outcomes are from that. Now, one thing that goes hand in hand and kind of powers a lot of these innovations is automation and artificial intelligence. So, do you think that will become increasingly critical? I mean, we're seeing, at least in the retail space, with innovations like ChatGPT, customers are now getting far more familiar with artificial intelligence and its power. But, for you on the back end, how critical is it going to be going forward?
Okay, so I think I'll just reshape that question slightly and tell you what's in it for us, right?
Sure.
And then allude to the automation, what's in it for us as a bank.
Yeah.
So, I once was in the audience with a kind of fairly famous venture capital person from the venture capital industry, and he said, if we can't build it, we finance it. And that's pretty much very similar to the business that we're in. If we can't originate the payment, then we would like to intermediate it. And this gives us a whole lot of knock-on value, which may not be really visible at this point, but over time, the collected knock-on value is quite significant. So for example, when it comes to sanctions or financial crime, the more data you have, the better you are likely to get at pinpointing financial crime or instances of financial crime. So this allows us to build, by intermediating payments from different parts or different walks of society, it allows us to build databases and to build the knowledge necessary to do far better surveillance and far better protection of the banking system. So that's one big thing that will help us, and it will be through automation, although the tools don't necessarily exist today, but through artificial intelligence and training them on these types of payments, on different types of payments, will deliver a more trained model that is better to find the needle in a haystack. So that's one big thing that will happen for the industry. or on behalf of the industry, which we are very passionate and very sort of focused on. The second thing is that you can't have any financial inclusion without automation. The world is vast, geographically, as well as in terms of, population, etc. So automation is necessary to deliver to the last mile. This is why we are investing in delivery through real-time networks. We have significant ways of delivering to payment wallets, etc. And that's kind of all automated end to end. And for a fintech, it has to be reusable for the whole universe of fintechs. So we offer an abstraction through the application programmer interface, which I talked about. And we offer that to all fintechs where they can digitally connect with us and, with 100% automation, make payments and find out the status of their payments. We've also launched something called Payments as a Service, which is a fully automated one-to-many payment solution that you can use for a different variety of use cases. So this will always be at the heart of what we do because, it is a game of millions, and without automating it, we will not be able to support, the increase in intensity of financial activity that is necessary to, generate more financial inclusion.
I completely love the financial inclusion aspect of it, and the fact that finally, just through strength of numbers and automation, we're going to start seeing millions of people get access to finances. That's just brilliant. But also,
well, in 2022,
yeah,
about 40% of adults in low and medium income countries transacted digitally for the first time. Right now, they will obviously retransact this year, right?
Yeah.
So they will add to the volumes this year, but this is only possible if you have companies that are focused on automating the experience end to end. You can't imagine the old way of bricks and mortar branches kind of fulfilling that promise.
That demand.
So this is something that has to continue, and this is something that we have to invest in.
Yeah, and Anurag, as I said, I love having use cases on the virtual arena, and you provided about 3 use cases there alone. So I've got to say a big thank you. And really, we've got to start wrapping up because we're coming to time. And I always leave the hardest question for last, Anurag, and that is kind of a crystal ball type question. So how do you see the payments industry evolving in the next 5 years? What should our viewers keep an eye out for?
Okay, so for traditional, the answer is kind of different for fintechs and traditional banks, right? So I guess for fintechs, there will be more and more use cases that come up that, with the advent of digital content, digital media, subscription. I don't think anybody watches TV as much as they used to. They watch more digital content through players. It may not be subscription based. It might be, pay-per-view type digital content. So there will be more and more use cases that will open up. Gaming, I said, is a big one. There used to be a huge NFT craze, a digital asset craze in the last 6 months, kind of died down, but probably, waiting for the next wave. So there will be more of the same going forward in terms of identifying the use cases and solving for them. University payments used to be a massive use case. Now with people going back into classrooms, back into universities, that will, further increase because, people have to send money to students abroad, the parents have to send money to students abroad, etc. So that will, the natural growth of such use cases plus new use cases will be on the rise for fintechs to address, where banks are, slightly old-fashioned and potentially a telegraphic transfer either arrives too late, is too expensive, or is just not convenient enough. Whereas for banks, I think the idea would be precisely as I said, we need to probably focus a little more on intermediation because we have ceded some ground to the fintechs. And we need to look at what can we do with our infrastructure that will make it better suited for fintechs to operate on it. So that includes investing in real-time payment delivery, connecting to real-time payment networks and infrastructure, keeping track of the central bank digital currency revolution and what opportunities that will open up, and whether we can be as banks participants in the CBDC, in managing and administering the CBDC. So there is plenty of, innovation that is happening both at the retail side, at the customer face, consumer face, as well as in the wholesale side for banks. And honestly, keeping track of it all is quite some challenge. And we should not be sort of distracted by, a whole lot of stuff that's happening, which may not pan out as well in the future. So sifting the wheat from the chaff is probably equally important.
It's going to be quite a hard thing to do over the next couple of years. I'm not envious that you're really the person who's going to have to go through all that, but I'm really excited to what you come up with. So Anurag, I've got to say a massive thank you. It's been absolutely fascinating hearing your perspectives. You're right at the front line of innovation. So I think our viewers are really going to enjoy it. So thank you very much.
It's a pleasure. Thank you so much.
Brilliant. And I've also got to say a big thank you to you, our viewers. You can catch the rest of the series and much more over at ffnews.com, of course YouTube, but especially LinkedIn, where you'll see me in the comments. Anurag, thank you very much and goodbye.